Hey folks, I'm back from Zanzibar and back in my office. It seems all quite sterile and quiet and weird and just normal, but that's probably quite a good thing after all the excitement last week. So let's go through some of the trades that we've got on and some that we haven't got on that we might put on. And I'll start with currencies as usual. I want to start with the dollar index, and we've got a few trades on currencies, so you'll be interested if you're trading, for example, the dollar yen. This is the dollar index, and if you remember, we broke out of this long-term pattern through the top just the other day, and breaking out of the triangle, actually getting up through this order block, through the top Bollinger Band into a very overbought situation. We've now pulled back only to the breakout level. So we've got a classic breakout pullback to the top of the triangle and the 20-period moving average. So the next move might actually be up on the dollar index. So be careful of this. I still do expect this to fall back into the pattern. And now that we've got a sideways pattern going across the page rather than a triangle, perhaps that's the top of the range and we're going to be range bound for the next number of months. Keep that in mind. If that is the case, we'll drop back down into these order blocks much closer to 100. If not, we may have to bounce here with a classic breakout pullback trade and then move up to the top of this potential megaphone pattern, which we've talked about a few times before. So be careful of that. We could go either direction. In terms of this megaphone, we're pretty much slap bang in the middle. So diddling in the middle, a decision to make by the dollar right now. And of course, that's going to affect the euro and the pound and the yen. Now, we're long on the euro, we're long on the pound, and we're short on the dollar yen. We've taken a little bit of profit on the dollar yen. Let me focus in on this one because it's been the fast mover. The dollar yen only got up to the top of this order block, a little peak through there. We've sold there, and we're now moving down quite sharply. We've taken some profit at the moving averages. There's the 200 and the 50, the medium-term direction indicator for swing traders. And we're now on top of the 100-period moving average, heading towards the 50% retracement level. It's more likely we'll get down to the 50% retracement level around 148.2 than carry on up here from now. So be prepared for that, and we're watching for a bounce there. It's possible as well, though, that this trend will continue on down like it did on the last sort of intervention period by the Bank of Japan. Not saying that's what happened on this occasion. But you can see once we started going, we got the waterfall pattern and then the eventual capitulation down here at the end. Are we going to get the same going into December? Probably not, because December, by the way, is a month where you'll see very relatively low volume, slow and steady moves, not many directional changes in December. So whatever direction we start off in, and it's the 1st of December today, is probably the direction in which we'll continue to melt into the early part of next year, into January when trading resumes after the holidays. In that case, I'd expect the euro and the pound to carry on dribbling up as well. That's barring the fact that the dollar index might bounce. Remember that one we just looked at. And just slowly begin to dribble up as we move along into December and then back into this range for the euro. Let's spread this out. Not really very exciting. Just down to the bottom of the range, a bit of a fake out there and bouncing back up again. Quite a dramatic spike low reversal here on the euro. So quite a large spike low on the euro here, so that may dominate this pattern trading for a while, and maybe we need to get back into the moving averages right up here at around 1.09, and maybe into the order blocks in the top of the range at around 1.1 to 1.11. So that's the euro. We're banking on that with relatively small trade positions. Same on the pound. The pound had a slightly more vigorous bounce than the euro, and just up to the 20-day moving average, so a point of resistance here. The 200-day moving average up here, and another point of resistance, a swing low. Note that where we are right now is this current swing low. We've actually broken through it. And then maybe this order block up here. If I zoom this out on the pound, there's the trend line we broke out of, so maybe a breakout pullback after bouncing off this longer-term purple line at the bottom here. So we're long on the pound and long on the euro and short on the dollar yen, having taken a fair chunk of profit on the dollar yen already. Hoping for that to carry on moving down. Remember, this is December, folks. As I said earlier, it's going to be probably a slow and steady grind one way or the other. No big dramatic moves. I've been trading Decembers for about 24 years now. This will be my 24th. And I've always been surprised at the steadiness of the markets. And in low volume markets, you expect a lot of whipsaw and chopping around. Doesn't generally happen in December. I think most people get bored and there are not many big trades or big positions being put on. Let's go across the stocks. Having said that, remember, I said melting in one direction, and perhaps in the stock market it's going to be a melt up in one direction. But we are short on the NASDAQ and several names, including NVIDIA, IWM, MSTR. Go and have a look at my previous trades on that. We got in unbelievable trade. Previous video actually describes this. We got in at the top, we got in slightly lower down. And this continues. This is actually going to be a hedge against Bitcoin's rally. And in fact, Bitcoin's gone one way and MSTR, MicroStrategy, has gone the other way. I don't want to talk too much about what I think is going on with this whole setup here, but nevertheless, we're short and I think we're in the right direction. That's all I'm going to say. Now, we're also short on Tesla and short on Apple. These are very small positions. I'm willing to flip these and go back into the long side on all of these, actually, if these markets look like they're going to continue to just gently melt up over the December season. If there are any big corrections coming up on the stock markets, I expect that will occur probably in January and not now. If we don't carry on melting up across the board on the stocks, perhaps we'll just trade sideways, top around 21,000 or so on the NASDAQ, and the S&P, maybe we're at a top already, and we've got to just sort of pull back and chop around in a range very much like we see most years. Right, now let's go and have a look at Bitcoin and Ethereum. We've been trading both, and actually some of the other metals. We're still long on all of the metals, actually. We're long on gold. You can see our entry positions there, one down at the bottom at the 100-period moving average. Let me go through these quickly and explain to you my thinking on that. Well, we just retraced 50% of the rally, basically, on gold. There's the rally from that flat bottom up to the top there. We pulled back exactly 50%, and the 100-period moving average bounced off there. That's where we took our long position. We did trade in and out here, long and short, approaching this dip, waiting for the dip, really. And we sort of got in, got out, hedged a bit. Maybe made a little, maybe lost a little. I can't really remember. Not much, if anything, anyway. But we've got a decent entry down here now, and looking for this to continue to move up. We are still underside this trend line here, so we haven't got back up through there and the 50-day moving average, that line there. So still vulnerable. I don't know what's going to happen next. And gold probably is due a decent correction at some point, as it is wont to do quite often. Now, while we're talking about gold, let's stick silver over here. Same sort of thing. Bouncing off the trend line, not 100% convincingly, really. We got in quite early over here at the drop down to the order block and the trend line, or close to the trend line. We rallied up and got into some profit there, dipped back down again and bounced off there late last week. So let's see how we go. I think we've got a good chance, but we've got to get up through these moving averages. A bigger order block up here, that previous swing high, and the danger of a head and shoulders pattern forming here if we turned around at that green, skinny green block. All right, so I don't know. We're long on that. Nevertheless, we'll see how we go. I don't know what these metals are going to do going into the season. And we've also got still a lot of geopolitical events going on. There could be some relief collapses in gold and the Swiss franc, for example. If this deal with Israel and Hezbollah and the deals that seem to be floating around in Russia, Ukraine, and then the Gaza situation, terrible, horrible situation. If some of those get resolved, we could see a relief rally, or rather dip, a rally in confidence, and therefore a dip in gold, risk-off type play. So be very, very careful. Any good news could send gold and silver spiraling lower, but for now we're holding up quite firmly. Now, Bitcoin, we still haven't broken the $100,000 mark. We did follow pretty much the pattern that I said you need to be careful of, this whipsaw action and freight breakdown, breaking down through that previous swing high and support, but only to the 20-day moving average. And I did point out last week that the 20-day moving average is your good short-term strength of trend indicator. As long as we hold above there, the trend is strong. We could still drop down to the 50-period moving average and still have a relatively strong trend, this being the medium-term trend indicator, direction indicator. And then, of course, we've got the 100 and the 200. So if you're confused about how to use these, very simple. 20-period moving average, strong trend. 50, medium term, and then the 200-period moving average, the long-term overall trend. So we're still holding up there strong. I think we may get bursting up through 100,000 sometime maybe even this weekend, actually, whilst everyone's eating turkey and celebrating Thanksgiving. Perhaps we could see a spike up. I don't know. Hasn't happened just yet, and we're still just languishing under the 100,000 mark and deciding what to do next. So we'll see how we go. Given what I said earlier about this period of the year, we're probably not going to see, move to 120, 130, or a dip down to 70 or 80. We may just be stuck where we are for the moment. And maybe we have to consolidate the entire December. I don't know. I think the market's going to get impatient, though, and a break up through 100,000, probably up to 102, 104, something like that, and then a bit of a clean out thereafter. That would be sort of the point of max pain, I suppose, getting rid of the shorts on the break up through the top and getting rid of the longs thereafter with the collapse back down through 100,000. Let's see how we go. So we're still long on gold. We're long on Bitcoin. Nice big position on there still, but we have taken a little bit off. Long on silver. We're still long on palladium, frustratingly so. This is the day chart on palladium, still in the smiley face, still holding the order block, but below all the moving averages. So, we'll have to see how we go. I still think that palladium's got a chance of a bit of a boost in the coming months and maybe even years if the internal combustion engine makes somewhat of a comeback. And then platinum on the bottom right over here, just holding support really, moving sideways and not very, very exciting. So we've got a long position, slightly out of the money on this one. Haven't added any more. It's not a big position. We'll see how we go. I'm not putting a lot of sort of weight on these precious metals at the moment because of the geopolitical ups and downs, and we don't know what the outcome is. If there's a terrible outcome one way or the other, something bad happens, we could see all the precious metals spiking up, Bitcoin too, perhaps going along with that. Let's go to energies, starting with uranium, the uranium twins, URA and UEC. On URA, we're still holding the 20-day moving average and the 50, well, all the moving averages actually, and holding up there quite nicely. And we're looking for this to move higher. And I'm not sure where we'll take profit on this one, but probably let's go to the weekly chart. And if you zoom out on the weekly, there's actually a lot higher we could go in the relatively short term, as you can see. But this chart, I'm not sure how far it goes back, has a high at about 130. We're currently trading at 30. So there's quite a lot above us. And if you look to this area here, a lot of zigzaggy moves down, and we might get into this zone, moving up into there with a lot of sort of zigzaggy moves up. We've seen the zigzags already starting to occur over here, and I'm hoping for this to move up. I think we could aim for something like about 60 to 65, something like that on URA. So I'm not going to go into UEC, but that will follow suit. We're trading pretty much the same on that. Of course, they will trade differently, being different instruments with different influences on them. Right, let's have a look at natural gas. We took a position on Friday, or adjusted our hedge, depending on how you're trading this. And pretty simple, really. I've got an idea that we could get a bounce from here. A little premature, perhaps a little early. I was expecting we could pull down into the triangle top here, or the rising triangle bottom, and these order blocks, and perhaps the Fibonacci numbers. I haven't even redrawn this Fibonacci retracement. So let me do that now and move that up to where we are. And now you can see that if we did drop back into that area, that would take us into between the 38 and the 50% retracement levels, and a good Fibonacci zone as well, in confluence with all of these other things, the moving averages and the triangles and so on. So we could still see that happen, and that would give us the breakout pullback trade off this triangle pattern. However, what we've also got is a breakout pullback above the swing high that occurred in July this year at 3.15. So we have had a breakout above that previous swing high and a pullback and a bounce off that level. That's the reason I took a small long position here on Friday, or adjusted my hedge in my case, or you may be trading the continuous, whatever it is that you're trading. I sent this out to my private group, and I made a note on X as well on Friday for those of you over at X. If you're not on X, it's a good idea to go over there, follow me on X, press the notification bell so that when I do post up trades or trade ideas, you'll get hold of them straight away. So we now weighted long on natural gas. My original entry, if you remember, was at 2.23. So that hedge trade idea continues. We're now at 3.35. And I've adjusted that hedge to the long side, which makes me now bullish again. My target for this trade, if we happen to get there before the roll this month, let's have a look at the weekly chart, is the 200-week moving average right up here. You can see that level is 3.86. And that's just a start. And I do think we could get up to this market structure break over here, which occurred in 2022. And that's at about 4.6. Now, that's not a prediction or a sort of a Nostradamus thing for natural gas. It's just what I think could potentially happen. We're now prepared for it, and we're positioned in that direction in the trade. But first of all, let's look at this 200-period moving average on the week chart at 3.85. Let's switch this back to the day chart. I'll just put a horizontal line in there just to illustrate the green line that I've just put in. That's 3.85, and then remember the market structure break up here into the high fours. So keep that in mind, and remember, don't try and get long on a break above the swing high over here at 3.6. If we should get there, we may only get to 3.85 and then promptly reverse back down to some of these trend lines, this green line, and the much longer term trend line coming up underneath. So we're approaching the expensive levels for natural gas now. It's not the time to go all in, load the truck, all that sort of thing, back up the Ford F-150. No, it's not time for that. It's time to be more cautious and maybe start looking for the short side. So once we get up into that sort of area, if we do 3.6, these previous swing highs, 3.85, And then if we do burst up through there and smash up through those resistance levels up to that market structure break level on the weekly chart, let's go back there very quickly. It's that skinny red line over there, about 4.7, 4.8. But first of all, the 200-week moving average, where I've drawn this green line at 3.85. Okay, folks, that's natural gas. Quite a long monologue on that one. And then also oil, we're short WTI. I covered this quite extensively in my last video last week whilst I was in Zanzibar. And we continue to sell rallies. We did so last week again. And although a lot of people think that WTI or Brent crude oil are going to bounce off the mid-60s and surge on up as we approach nuclear Armageddon, I think that's incredibly unlikely. And I'm actually targeting much further down into the low 50s and probably the 40s and 30s thereafter. But that's looking out much further. And again, it's not a prediction. Next stop could be $100 a barrel or 120. I don't know. It's a funny old world. Anything can happen. And some of it is actually not so funny. Right. I think that's covered all of that. Uranium, natural gas, oil. Let's have a look at some of the softs and the grains. A lot of folk asking about cocoa and coffee, but let me go through my positions very, very briefly on the other instruments here too. Sugar, we were long on sugar actually until Friday, and I've now abandoned this trade after having taken a long there and a long there. We've exited this long position and I'm waiting for a bounce. This is still not convincing. I think we could get one more spike low. We may just get back into this trade on Monday. I don't know. We still got that tweezer bottom there. As long as that holds, there is some hope. But on Friday, we broke down through this medium interim support here. Let's look on the 4-hour chart. So just breaking down through there, breaking through that support and closing beneath it. So I think we may have to retest that one. It is forming what looks like a bull flag pattern. But the longer these flags last, and this one's going on a little bit too long now, it's disproportionately long in comparison to the size of the flagpole. You want to see a flag that looks like it belongs there. This flag doesn't, it's sort of probably twice as long as it should be. So it's not looking good. So we bailed on that one. We'll revisit it. Don't be afraid to bail out on trades after a time period. If it just isn't doing what you expect and it's continued to dribble away, no point in staying in the trade. Now, cocoa and coffee, the two tricky ones, well, we've re-hedged our cocoa trade. So I'm completely hedged on cocoa again. I haven't drawn that in there. But we locked in some of the profit on the longs that we took on the hedge trade. And so we still remain pretty much at break even on cocoa. And we'll have to see how we go on this one because we had a little... We'll have to see how we go on this one. We had a little spike high on Friday, but we did close above that trend line and not below it. So that's not looking convincing, and I'd rather be hedged than anything else on that right now. But I still think that pattern could play out, and we are looking for this eventually to move down. Coffee, the same sort of thing, although we're not hedged on coffee, and we broke up through that level. I was allowing for a move up to about 320 to 330, and we got slightly above 330. We got up to almost 340, actually 336. So not quite getting out of that zone. A nice reversal, not quite a dark cloud cover candle, but something like it with a big spike high on the top there. So looking for coffee to perhaps, maybe this was a fake breakout and we'll move back into the channel or below this trend line and then eventually back into this channel. And that could just be a sort of a blow off top. I don't know. We have a small position on this. I'm willing to hedge this at a moment's notice. We're also long on corn, as you can see from these positions here. Really all being quite boring. Long on cotton. This is one of my sort of more favorite trades, I suppose. Trading cotton from around about this red line. The bottom of this range, the green line, we bought a gain, bouncing off there and moving back up to the red line. We'll probably get above the red line, back up to the top of the range. I could clone this bottom one and put it at the top there. And it's pretty much a perfect range. So now that we've got back to the middle, we'll probably go to the top. We'll see what happens thereafter. This will be the third touch of the top. There's the first one, the second one. This will be the third one. And will it be third time lucky? I don't know. We'd love to see a break up through there. Got quite a decent position on cotton. And it's probably one of my favorite trades, if there are any, in the softs and the grains right now. We're short on orange juice. Bit of a spike high on Wednesday, Thursday, and Friday. Friday falling back down again. So starting to form a bit of a trend line here, I suppose, and now we've got something to work with. So once we get down through that trend line, if we do, and we've got this black horizontal line here, I'll potentially add to my short position on orange juice. We have a small position right now, not really enough to make this worthwhile just yet, but we haven't confirmed a reversal. So if we break down through there, reverse, test it from underneath, get a reversal candle pattern of some sort, I'll look to sell additional portions of orange juice, add those to my trade. We're also long on wheat, being disappointing on wheat too. And we've got positions still slightly in the money, perhaps on wheat, just moving around. There's that very long-term trend line breakout, pullback, and with a bit of luck, we should keep going now. But perhaps we're going to dribble along sideways. We're at quite a significant support level right now. This horizontal line that we're at, roughly, it's not perfect, more of a zone. That's where we are now. Ideally, we'll hold above there. It's also a Fibonacci retracement number from the move up from the bottom. We're long on soya as well. And once again, just sort of bouncing along the bottom. All of them looking pretty much the same. They're all pretty much oversold, all at the bottom of their ranges and in the buying zones. It's just a matter of now timing, how long this is going to take, and whether we've got to get some false breaks down below these shelves, I suppose now you could call them. And let's wait to see what happens. So we've got a fair number of long positions. We've also got a few shorts, cocoa, coffee, and orange juice. We're short the luxuries, long the basics. Then the rand pairs just going sideways for weeks and weeks and days, not much to say about that. Generally looking to short the dollar against the South African rand. And we're up in that zone, and we have a small position on here. We could still bounce up into the underside of this channel line that we broke out of. And depending on the politics going forward with the Government of National Unity in South Africa, this will either move down or it'll move up like every other instrument, every other day. But this is sort of, I suppose, in the balance to some extent. I do think, though, that we'll see this prep. Maybe we'll get a little test about 18.6, somewhere around there. But then I think we'll get this move down eventually, down to the bottom of this larger long-term channel. Let me zoom out and convert this to a week chart so you can see it more easily. And something like that. So somewhere down here, and I think we could get down to about 16 on the dollar against the South African rand. We're long on VIX, and that's just bouncing along the bottom like many other things that we've talked about today. And we'll see how that goes. Small position on that, just waiting to see what happens. I think, though, the VIX is pretty much not, I don't think it's going to be a lot to be gained from that until the end of the year. If the markets just carry on dribbling sideways to upwards, probably the VIX will just do the same, sideways to downwards. And then TLT, we're long on this one. Finally, we got some decent moves breaking out of the ovoid that we spoke about last week. Our long positions are the two green arrows, looking quite good. And actually, we closed above the 200-day and the 50-day moving average, well above the 20, after gapping up a few times in a row. If I zoom this out, you can see our target and my goal for this. Once again, not a prediction. Don't ever say that I predict the paths of these things. These are ideas, possibilities, concepts, and I'm building up something, a structure, which I think may happen. If something happens to sort of change this, change the outlook, change the pattern, it could be anything. It could be politics, could be something on the chart. It could be something that happens with the Fed, could be anything. Could be, wars, whatever it might be. Horrible things could go on as well. And so I don't know the way this is going to go. But if that does change this pattern or this outlook or this picture, I will immediately reverse my idea or change my idea or adjust my idea. This is not a prediction. It's what I think most likely is going to happen with the current setup. And we're moving up into that now. So that's TLT. And, well, it's going to be a long-term trend. This is not a get-rich-quick trade by any means. So that's our TLT trade. I want to switch back to natural gas very quickly and just point out one thing. I've got a continuous trade on as well at Pepperstone, and this is the way it looks at the moment. I got in long at about 2.23 as well. This is a continuous trade, just for those of you trading Pepperstone, looking for this to carry on moving up. And I'm going to be trading this in alignment with the way the futures move. Whatever the futures do, if they start moving down, I'll expect this to move down and vice versa. Talking about that, I want to switch across quickly to barchart.com, show you what the futures prices look like, and then have a look at the COT report very quickly for natural gas. You can see the forward curve here. The front month trading at 3.36, that's the current front month we're trading. Then February 3.2, March 2.8, April 2.9. So no great shakes going in there, but we're now in a situation where the front month price is higher than the forward month, so we're in a backwardation situation. Keep that in mind when you're trading it. I wanted to show you the COT report very quickly, show you what's been moving and what hasn't. Let's scroll down here. We've got the commercial 712 long, 554 short, so balanced to the long side, but adding a lot more to the short side. Interesting. Are they expecting this price to move up by adding the hedged short positions? Have a look at producers, 278 long, 298 short. Pretty balanced, adding a lot more to the short side. Be careful those who are shorting natural gas. Managed money, 184 long, 303 short, adding more to the short side as well, and perhaps adding to the wrong side of this market considering what the producers and the commercials are doing. Non-commercials, 236 long, 397 short, adding to the short side but adding more to the long side. The swap dealers, hedgers, market makers, 212 long, 35,000 only short. Interesting there, very, very heavily weighted to the long side, indicating that the commercials and the producers may have it wrong. So a bit of a mixed bag, but we are seeing the hedging aiming towards the short side, in other words, expecting the market to go up. So for those of you who are long, you might just be on the right side of this trade. And remember, we are in backwardation now. Well, folks, I hope you enjoy that. I really appreciate your thumbs up and your subscribe. And if you'd like to join my private group, there's a link below. We have a 31% discount for Black Friday. Got to do it. Everyone else does it. So if you want to join up at my private group, join me and the others as we take my trades, we discuss trading, and every single trade that I take personally is signaled in the trading room, recorded and logged for your edification. Quick look at Bitcoin and Ethereum before we go, the only ones that are trading live right now over the weekend. Quickly look at the 4-hour chart on Bitcoin. I think this is looking pretty good, holding up above these moving averages. Let's have a look at Ethereum, also looking good and holding up way above all the moving averages, even on the 4-hour chart. Good luck for December, folks. I'd love to see you in the private group. Remember, there's a link below, 31% off. I'd love to see you in there. If you're struggling with your trading, quite honestly, probably be the best at $60 a month, probably be the best investment you've ever made. And I'd love to see you in there and to help you out if you've got problems with your trading. Take care. See you soon.
NATGAS kings, we trade with grace. It'll make the smile, lights up the place. Market swing, but we hold our base. Double bottom strong, we're in the chase. Come on, clicking.